Hey everyone, welcome back to our series on General Ledger Accounting or FIGL in SAP. If you're here, it means you're ready to dive deeper into the configuration aspects of FIGL. In our previous video, we introduced you to the fundamentals of General Ledger Accounting. Today, we'll focus on the configuration of General Ledger Accounting, specifically up to the topic of fiscal year. Whether you're a beginner or someone looking to understand how it works, stick around as we break it down in simple terms. Before we dive deeper into the content, just a quick note for all of you watching. If you feel that the pace of the video is too fast or too slow, you can easily adjust the playback speed to suit your comfort level. So, feel free to adjust the speed to whatever helps you learn best. And don't forget, you can always pause the video and rewatch sections if you need more clarification. Over the course of this series, we will cover the following topics in FIGL. 1. Configuration of General Ledger Accounting. 2. Master Data. 3. Business Transactions. 4. Periodic Processing. 5. Reporting and Analysis. 6. Tools. 7. Apps for General Ledger Accounting. In today's session, our primary focus is on the first topic, Configuration of General Ledger Accounting Fiscal Year. Let's start with its purpose and process flow. Purpose. Before you can leverage the full power of General Ledger Accounting, you need to configure the system. This includes making general accounting settings, configuring ledgers, and setting up integrations with controlling, CO, and, if required, parallel accounting. These steps are foundational for accurate and effective financial management. Process flow. Let's break down the process flow into actionable steps. Here's what you need to do. Create company code and controlling areas. The first step is to create your company code, which represents the smallest organizational unit for which financial statements are created. Additionally, define one or more controlling areas to enable cost and revenue tracking for your organization. Set general settings for fiscal year, posting periods, and currencies. Next, make the general settings for your fiscal year, posting periods, and currencies. These settings ensure that your financial transactions align with your organization's reporting requirements. In SAP, you configure the fiscal year and posting periods through the customizing menu under Financial Accounting Global Settings and Ledgers. Configure the ledgers. The next step is to configure the ledgers, starting with the leading ledger and, if required, non-leading ledgers. Each ledger plays a specific role in financial reporting and compliance. Define integration with controlling, CO. To ensure seamless data flow between financial accounting and controlling, you'll need to define the integration. This step connects your cost and revenue reporting to operational metrics, improving decision-making. Set up parallel accounting, if required. If your organization operates under multiple accounting standards or legal frameworks, you'll need to configure parallel accounting. This allows you to maintain separate financial statements tailored to different requirements. With these steps complete, your general ledger accounting configuration will be ready to support your organization's financial processes. Remember, attention to detail at this stage ensures smooth operations down the line. Configuration of General Ledger Accounting has key components like fiscal year settings, currencies, ledger configuration, parallel accounting, and extensibility options for finance. Let's dive right in. Fiscal year. In SAP, the fiscal year is a key structure for organizing financial data. It defines the start and end dates of accounting periods, ensuring that your financial transactions align with your reporting calendar. In SAP Customizing, you set up the fiscal year under Financial Accounting Global Settings. You can define regular or special periods depending on your organization's needs. Currencies. Configuring currencies is essential for organizations operating in multiple regions. SAP allows you to set up local, global, and parallel currencies to meet diverse reporting requirements. Make sure your currency settings align with your company code and ledger configurations for accurate reporting. Configuring ledgers. The leading ledger is the primary ledger used for standard reporting, while non-leading ledgers can support specialized reporting requirements. You can configure ledgers to manage multiple accounting standards, ensuring compliance and flexibility in financial reporting. Parallel accounting. Parallel accounting allows organizations to manage multiple financial reporting frameworks simultaneously. This is particularly useful for multinational companies or those subject to different statutory requirements. Setting up parallel accounting involves defining ledger groups and assigning them to specific accounting principles. Extensibility options for finance. SAP provides tools like in-app extensibility and side-by-side extensibility through SAP Business Technology Platform to tailor financial processes to your organization's unique needs. These options allow you to customize your financial operations without compromising on system stability or future upgrades. We'll now explore the concept of the fiscal year in general ledger accounting. Understanding the fiscal year is crucial for organizing your financial transactions and ensuring accurate reporting. Let's begin with the definition. A fiscal year is a time period, typically 12 months, for which a company prepares its financial statements, including physical inventory counts and balance sheets. While it often aligns with a calendar year, this is not mandatory. In some cases, companies may use a shortened fiscal year, lasting less than 12 months. Structure of the fiscal year. The fiscal year in SAP is structured into posting periods, each defined by a start and end date. Additionally, special periods can be included for tasks like year-end closing. For example, the leading ledger supports up to 12 posting periods and 4 special periods. Meanwhile, non-leading ledgers and the special ledger component can accommodate up to 366 posting periods. Posting restrictions. There's an important restriction to note. Direct posting to ledgers with more than 12 periods using transaction FB01L is not possible. Instead, you must use ledger groups with representative ledgers that have 12 or fewer periods. Use and configuration. Defining a fiscal year is a mandatory step in SAP, as it allows you to assign business transactions to specific time periods. The fiscal year is created using a fiscal year variant that can be shared across multiple company codes. You can choose between 2 fiscal year variant types. 1. Fiscal year aligned with the calendar year. 2. Non-calendar fiscal year, where posting periods differ from calendar months. Integration. When you post transactions, the system determines the posting period based on the posting date. In the general ledger, transaction figures are stored for each posting period and special period, separated into debits and credits. In the special ledger, FISL, these figures can also be stored as balances for enhanced reporting. In summary, the fiscal year structure in SAP plays a critical role in organizing and reporting financial data. By configuring fiscal year variants, you ensure your system aligns with your business needs and compliance requirements. The fiscal year serves as the backbone for organizing financial data and ensuring compliance with accounting standards. It includes the following topics, and we will discuss them all in details. Fiscal year and calendar year. Shortened fiscal year. Special periods. Assignment of fiscal year variants to a ledger. Fiscal year of ledger versus fiscal year. Determining posting periods when posting. Opening and closing posting periods. Opening a new fiscal year. Let us explore the relationship between fiscal year and calendar year in SAP. When defining a fiscal year variant, you have 3 options. 1. Fiscal year corresponds to the calendar year. 2. Fiscal year is year independent but differs from the calendar year. 3. Fiscal year is year specific, valid only for a particular calendar year. Let's dive into each of these in detail. Fiscal year variant corresponds to the calendar year. If your fiscal year matches the calendar year, here's what happens. The fiscal year starts on 1st January. There are exactly 12 posting periods, aligning with the months from January to December. The periods are automatically mapped to calendar months by the system. This setup is straightforward and requires no additional configuration for defining individual periods. Year-independent fiscal year variant or non-calendar fiscal year. In some cases, your fiscal year doesn't align with the calendar year. For example, it might start in July and end in June. In this configuration, the fiscal year is independent of the calendar year. Defining posting periods. Posting periods may also differ from calendar months, offering flexibility to match your business cycles. To enable the system to determine the posting period correctly, define the month limits and day limits for the end of each period. For February, always set the day limit to 29. This ensures accurate handling during leap years. For example, if you enter 28th February as the day limit, transactions posted on 29 February would be written to the next period, potentially causing errors. Defining the fiscal year. Since the fiscal year doesn't match the calendar year, SAP uses a year shift to align postings with the correct fiscal period. The year shift can be defined using values like -1 for the previous calendar year, 0 for the current calendar year, +1 for the next calendar year. For example, consider a fiscal year starting on 1st April and ending on 31st March. Here's how it works. If you post on 3rd February 1999, the system determines the posting period as 11 of the fiscal year 1998. This is made possible by configuring the year shift. Best practices and tips. When configuring a non-calendar fiscal year, keep these points in mind. Always define accurate period boundaries. Use leap year settings to avoid posting errors. Test your fiscal year variant in a sandbox environment before going live to ensure accuracy. A non-calendar fiscal year configuration provides flexibility for organizations with unique accounting cycles. With careful setup, SAP ensures accurate period determination and seamless financial reporting. Let's dive into an example that demonstrates how SAP uses year shift to determine posting periods and fiscal years in a non-calendar fiscal year setup. Here's the scenario. The fiscal year starts on 1st April and ends on 31st March. We'll analyze how the system determines the posting period and fiscal year for specific posting dates. Example 1. Posting date 20th December 1998. For a posting date of 20th December 1998, let's see how the system calculates. The year shift is 0, indicating the same calendar year as the posting date. Based on our fiscal year setup, this date falls within period 9 of fiscal year 1998. Example 2. Posting date 13th January 1999. Now, for a posting date of 13th January 1999, the year shift is -1, meaning the fiscal year aligns with the previous calendar year. This date also falls within period 9, but the fiscal year is 1998, not 1999. Here's a quick recap of the system's calculations for the two posting dates. Posting date year shift period fiscal year. 20th December 1998 0, 9, 1998. 13th January 1999 minus 1, 9, 1998. This flexibility ensures that transactions are correctly mapped to the relevant fiscal year, even when the fiscal year doesn't match the calendar year. Year-specific fiscal year variance. In this session, we'll explore year-specific fiscal year variance in SAP. This specialized setup allows you to define fiscal years that align with a specific calendar year or follow a unique, week-based structure. What is a year-specific fiscal year variant? A year-specific fiscal year variant is configured to be valid only for a specific calendar year. When defining such a variant, you enable the year-specific indicator. You must then define the period end dates for each fiscal year, specifying month and day limits. Importantly, year shift entries are linked to the specific calendar year being defined. SAP displays this year during period setup to ensure clarity. Week-based fiscal calendar. A special form of the year-specific fiscal year variant is the week-based fiscal calendar. Let's break it down. The fiscal year is divided into 52 weeks, or 53 weeks during leap years. Each fiscal quarter contains 13 weeks, with the fourth quarter extending to 14 weeks in leap years. The start and end of each fiscal year quarter, or week always fall on the same weekday. This structure offers consistency and simplicity, especially for businesses with weekly operations. Differences from the Gregorian calendar. The week-based fiscal calendar deviates from the Gregorian calendar in several ways. Aspect: week-based calendar, Gregorian calendar. Business weeks 50-53 varies. Days in fiscal year 364 by 371, 365 by 366. Days per fiscal period 28/35/42, 28/29, 30/31. This unique structure supports businesses where weekly cycles are critical for reporting and operations. Benefits of year-specific variance. Year-specific fiscal year variants are ideal when a fiscal year differs significantly from the calendar year. Specific industries require unique setups, such as retail chains or manufacturing units that rely on week-based cycles. By leveraging SAP's flexibility, businesses can ensure alignment with operational and statutory requirements. Whether it's standard year-specific variants or week-based calendars, SAP provides the tools you need for precision in financial reporting. Example of a 445 fiscal calendar. In this segment, we'll delve into an example of a week-based fiscal calendar, the widely used 445 fiscal calendar. This system is structured for consistent and predictable reporting, commonly adopted by retail and manufacturing industries. What is the 445 fiscal calendar? The 445 fiscal calendar splits the fiscal year into 4 quarters, with each quarter divided into 3 fiscal periods. The first 2 periods have 4 weeks each. The third period has 5 weeks. In leap years, the last period of the fiscal year extends to 6 weeks. Let's visualize this with an example. Consider the fiscal year starting on 31st December 2018 and ending on 29th December 2019. In this setup, the period from 31st December 2018 to 1st January 2019 must be split into 2 posting periods due to different year shifts. Each period is defined with specific conditions to derive the fiscal year and posting period. How does the system derive posting periods? When transactions are posted, the system uses the posting date to determine the posting period and fiscal year. Here's how it works in our example. Posting date year shift period fiscal year. 31st December 2018, 2018 plus 1/1/2019. 13th January 2019, 2019 by 0/1/2019. Notice that the system handles the year shift +1 for 31st December 2018 and 0 for 13th January 2019 to correctly derive the fiscal year and posting period. Key considerations for setup. To configure a 445 fiscal calendar in SAP, keep the following in mind. 1. Define the number of posting periods required, including adjustments for leap years. 2. Specify start and end dates for each period, ensuring precision in period end reporting. 3. Handle special conditions for year shifts, as shown in this example. The 445 fiscal calendar is a robust system for businesses that prioritize consistency and operational alignment. Now let's us begin discussing a key concept in fiscal year management in SAP, the shortened fiscal year. This special configuration arises in scenarios like business startups or transitions in fiscal year structures. Definition. What is a shortened fiscal year? A shortened fiscal year is defined as a fiscal year that spans fewer than 12 months. It's often needed in cases like starting a business mid-year, transitioning from a calendar-based fiscal year to a non-calendar fiscal year, or vice versa. Setting up a shortened fiscal year. In SAP, defining a shortened fiscal year requires the following steps. Always mark the shortened fiscal year as year-specific. It applies only to a specific year and must transition to a complete fiscal year afterward. Use the same fiscal year variant to define both the shortened fiscal year and subsequent complete fiscal years. To define a shortened fiscal year, in customizing of financial accounting, choose Global Settings, Financial Accounting, Fiscal Year, Define fiscal year variant. Define shortened fiscal year. Integration considerations. How you define a shortened fiscal year depends on whether you use financial accounting with or without asset accounting. Let's break it down. Without asset accounting, fiscal years can start with any user-defined period. With asset accounting, fiscal years must start with period 001 to ensure accurate depreciation calculation. Cautionary notes. Modifying fiscal year settings can have significant impacts on your system. It's crucial to consult SAP support before making changes. Refer to SAP Note 322407 for detailed guidelines. Use case example. Let's imagine a business that transitions from a calendar-based fiscal year to a 445 fiscal calendar. In the transition year, they configure a shortened fiscal year from 1st January to 31st March. The complete fiscal year then starts on 1st April under the new structure. This ensures seamless reporting and compliance with fiscal standards. Shortened fiscal years are pivotal for accommodating dynamic business needs like startups or fiscal calendar changes. Next is special period. Let us dive into a unique feature in SAP's fiscal year configuration, special posting periods. These periods are essential for streamlining year-end closing operations. Definition. What are special posting periods? Special posting periods are additional periods that subdivide the final regular posting period in a fiscal year. They're used specifically for closing operations, allowing organizations to prepare multiple supplementary financial statements. Key features of special periods. Here are some important aspects of special posting periods. 1. A fiscal year typically has 12 regular posting periods. 2. In general ledger accounting, up to 4 special periods can be defined. 3. If fewer than 12 posting periods are required, unused periods can be repurposed as special periods. Keep in mind, SAP allows a maximum of 16 periods per fiscal year variant, including both regular and special periods. Integration and usage. When working with special periods, there are a few considerations. The posting date must fall within the last regular posting period. Special periods need to be explicitly defined in the period field of the document header, as the system cannot determine them automatically. Example use case. Imagine you're closing financial books for the year, and you need to record adjustments for audit purposes. Times the first special period is used for pre-audit adjustments. Times the second is reserved for audit findings. Times the third is for managerial review, and the fourth is for final reporting. This ensures every stage of the year-end process is clearly documented and traceable. Configuration note. When defining your fiscal year variant, specify the number of special periods needed. Remember, changes to these settings can have system-wide implications, so careful planning is crucial. Special posting periods are a powerful tool for detailed and structured year-end closings. Proper configuration ensures accuracy and compliance in financial reporting. This concludes this video. We will cover the remaining topics in the next one. By mastering fiscal year configuration, you lay the foundation for accurate financial reporting and efficient general ledger operations. This critical setup ensures your organization's financial data is structured and compliant with reporting standards. Thank you for watching, and we encourage you to explore other videos in this series to further enhance your understanding of SAP General Ledger Accounting. If you found this video helpful, don't forget to hit that like button, subscribe, and click the bell icon so you never miss out on our latest content. Drop any questions or thoughts you have about General Ledger Accounting in the comments below. We'd love to hear from you. Thanks for watching, and I'll see you in the next one.